Let's focus in on some particular movers here this morning. One call caught our eye, Brian Sozzi, this morning, and that's from Goldman Sachs. It looks like they have a new internet analyst, and so they're technically initiating coverage on the sector, and they've got buy ratings on the likes of Amazon and Facebook. So it's interesting, given our discussion of a few moments ago when you were talking about maybe there could be some risks to some of the FANGs. Looks like Goldman doesn't think so, at least not for those two.
Still pushing back on the pushback, Julie. All right, well, that's good. Although, look, the Goldman analyst clearly doing their flex this morning, coming out with a host of buy ratings. As you mentioned, I'll put the FANG debate to rest for a minute. I'm looking at what Goldman came out here in terms of a sell rating. You don't necessarily see Goldman come out here with sell ratings, and when they do, you really don't necessarily see it on household name companies. So Goldman out with a sell rating initiates Airbnb. Price target $132. Twitter sell rating $60 price target. Seeing Airbnb shares under pressure here in the early learning. Twitter as well. So interesting calls there. But going back to your buy ratings, Julie, it looks like this just is a valuation type call that they still see profits growing for a lot of the FANG stocks.
I guess I'm just feeling a little glass half full this morning. You're doing a little glass half empty, perhaps. Yeah, Airbnb, you can see definitely feeling the pain from that. Yeah, I know. It's kind of fun. Yeah, I mean, just to one more detail here from this note, basically they're saying the market is still underappreciating the prospects for long-term compounded growth and or longer-term operating margin structures as reflected in current valuation. As you say, basically these stocks that they like, the ones they like, not being priced correctly.